We've been talking a lot lately about the new covered call income ETFs with their insane returns over 50% annualized and even 100% in some cases. But we also know that Bitcoin has dominated growth assets for over a decade, compounding 58% annually over the past 5 years. So in this video, I present my Flywheel portfolio that combines both of these powerful forces into one wealth generation machine. If you're ready to level up your financial game, then hit that like button, pause your notifications, and let's get started. So here's a simplified view of the wealth generation flywheel. The two pillars are income ETFs for cash flow and growth assets for wealth preservation. Cash flow is generated on a monthly basis with distributions used to buy additional growth assets. Excess growth is used to buy additional income ETFs, and the cycle repeats with the total value of this machine growing over time. Now, for some specific assets to include in the flywheel, I sourced some suitable ETFs from my income ETF blended power ranking. If you missed it, check out my high yield income ETFs playlist to learn all about my blended power rankings of top performing covered call ETFs. These ETFs cover the spectrum for yield and risk appetite, so you'll want to confirm which ones match your personal investment style and goals. For my flywheel, I selected 10 income ETFs diversifying across risk levels and underlying asset exposure. Ultimately, I chose a few of the YieldMax single stock and diversified underlying assets, as well as Roundhill's Bitcoin and NASDAQ offerings. And for the growth side of our flywheel, of course, the primary asset is the ultimate sound money, Bitcoin. But I also included allocations to gold and strategy, which I'll explain later. So this wealth generation flywheel is not your grandma's 60-40 stock bond portfolio, but it's designed for massive wealth generation using the latest covered call ETFs and the most advanced form of savings technology. So now let's check out the specific assets in the flywheel, starting with the income side. So here you see that 84% of the flywheel is devoted to income generation spread across 10 income ETFs. The first three have the largest allocations with 15% each. I won't spend too much time on each one, but check out my last Power Rankings video update for brief overviews of each one. The first two, OARK and ULTY, are based on diversified underlines and recently scored amazing blended average annualized performances of 61% and 57%. That last one, YBTC, is based on Bitcoin ETF underlying and scored a respectable 46% blended average annualized. In the next group of four, we have 7% allocation for each of these covered call ETFs. We gave them a little bit less allocation due to the higher risk factors. The HUI, TSMY, and NVDY are based on a single stock of Robinhood, Taiwan Semiconductor, and NVIDIA. QDTE is based on the NASDAQ 100 basket, so there is a little bit of diversification there. All of these are solid performers with PE ratios for their underlying stocks ranging from 25 to 57. And you can see that the best NVDY had a 74% blended average annualized performance with QDTE at 30%. HUI didn't have a blended average score yet because it doesn't have 6-month track record, but its initial 3-month blended average annualized performance was a really impressive 193%. So we included it here because it has a lot of promise. The next batch of Coney, PLTY, and Misty have a slightly less allocation because they have been strong performers in the past with very solid returns, although recently Coney and Misty have been faltering, but we do hope that they're going to come back. And PLTY is a strong performer in the top 5 of our blended power rankings, but because the underlying Palantir has a PE ratio in the 500s, we feel that there's a bit of risk there that could dip any time based on that high valuation of Palantir. So that's 84% of the flywheel in income generators, leaving 16% for storing value in growth assets. Now, on this channel, we believe that Bitcoin is the most sound money and apex savings technology. If you don't yet understand or believe that, I recommend you start with my series, Why You Can't Afford to Ignore Bitcoin. And YouTube is full of videos answering any specific questions you might have. Bitcoin has now been proven and established over the past 16 years as the most secure, non-sovereign, fixed supply digital commodity, perfect for preserving and growing your wealth. So it makes up the bulk of our growth assets. But along with Bitcoin, we've included allocations to gold and strategy stock, formerly MicroStrategy. Now, gold had been the best form of sound money since the beginning of time, and it's still adopted globally and hoarded by most nations, and especially by those who have not yet clued in to Bitcoin's superiority. MicroStrategy is the #1 Bitcoin treasury company, and Michael Saylor has engineered it to outperform Bitcoin, which it has been doing for the past 6 years. This chart goes back 6 years and it compares Bitcoin to strategy, gold, and stocks. Over 6 years, strategy has grown over 2,000%, Bitcoin has grown over 1,200%, gold has grown 132%, and the S&P 500 stocks has barely doubled, increasing 117%. Now, looking at the 4-year chart, you can see that strategy is up 400%, Bitcoin is up 200%, gold up 94, just short of doubling, and stocks have only gone up 50% in 4 years. This paints a picture for why we're choosing to keep the flywheel growth assets in Bitcoin primarily, but also giving some exposure to strategy and gold. And we can take a look right now at the actual distribution in our flywheel. 16% is for growth assets, with 10% allocated for Bitcoin in the form of Bitwise's BitB Spot Bitcoin ETF, which you can hold in any brokerage account. And then 3% allocations to each of GLDM and MSTR for the gold and MicroStrategy exposure. So now let's take a look at the type of exposure our flywheel assets provide. 37% is in income ETFs holding diversified, actively managed baskets of stock, with 15% in OARK, 50% in ULTY, and 7% in this NASDAQ 100 QDTE. An almost equal amount, 38%, is in single stock covered call income ETFs for income generation, and then 3% in gold or MSTR stock for store of value. And then a slightly less allocation, or 28% of the flywheel, is going to be in direct or indirect Bitcoin exposure, with 15% in a Bitcoin covered call ETF, 10% in Bitcoin itself through the Spot Bitcoin ETF, and then 3% in strategy, which is the Bitcoin treasury company. And then just for fun, I'm showing you the schedule that distributions will be paid for the income generators. So you see that 47% of the income ETFs will be paying out on a monthly basis. 37% will pay out weekly distributions. And then 16%, of course, are in the growth assets, so they do not pay distributions at all. So going back to our flywheel model, the income ETFs will pay out distributions weekly or monthly, accumulating cash balance in the portfolio. When the cash grows to some meaningful amount, we can reinvest into the flywheel assets that have become under-allocated relative to their original target percentage allocations. Now, if the growth assets have dipped in value and are below their target allocations, then the distributions can be used to purchase gold, Bitcoin, or strategy stock as appropriate. If the growth assets have increased in market value relative to their initial target allocations, then the distributions are considered as excess growth and can be used to buy additional income ETFs that have dropped below their target allocations. It's also possible that the growth assets could appreciate well above their initial target allocations. In that case, we could use our discretion to sell off some of the growth assets to reinvest into some of the income ETFs that have fallen below their target allocations. Now, you can implement this flywheel portfolio in any brokerage account like Robinhood, Fidelity, or E-Trade. But I want to quickly show you how the M1 Finance app easily handles setting up this flywheel portfolio. M1 is excellent at letting you define your portfolio as a pie, with each asset being one slice of the pie. So for my flywheel portfolio, I added the 13 assets as pie slices and assigned each one the target percentages that I described earlier. I then funded the portfolio with an initial $80,000, which M1 invested into the individual pie slices according to the percentages I specified. Then as the market price fluctuates, M1 does a great job of showing you the real-time value of each slice, as well as their actual percentage slice of the pie relative to the target that was originally set up for it. Then as you receive distributions, cash will accumulate into the account, and then you could either specify that they be automatically invested based on meeting some minimum threshold. So you can say once it gets up to $1,000, it will do an automatic investment. Or if you're like me, you could specify to keep that auto investment off, and I'll just manually handle whenever I want to buy. I will wait for the cash to accumulate to a meaningful amount. And then based on the market conditions, if I feel like market prices are down on a given day, I'll choose to buy in that day. And when you buy, it will automatically distribute it across the pie slices based on the ones that have dropped the most from their target allocation. Apart from reinvesting distributions or new cash deposits, you can also tell M1 to rebalance your portfolio at any time. And when you click on rebalance, M1 will automatically sell off any slices that are much higher than their initial target allocations and then use the proceeds to buy into the slices that are much lower than their initial target allocations. And lastly, M1 can give you an estimate of your dividend income. So here you can see over the next 12 months, based on this $80,000 size portfolio, it's estimating that we will be seeing average monthly income of $2,500. Now, if you want to try out M1 for yourself, you can earn up to a $75 bonus if you use my referral link at bitbagger.io/M1. So there you have my wealth generation flywheel. Feel free to drop a comment below sharing your preferences for any different assets or allocations. And be sure to subscribe to the channel and check back later for my updates on how the portfolio is performing over changing market conditions. Well, thanks for watching. Be sure to like the video and share it out to those you love. And until next time, be wise, be safe, and stack stats.